Hi, I'm John Prasinos, Editorial Director of Investing Daily, with a video presentation for Friday, June 4. Today I'm stepping back from the daily ups and downs of the financial markets to address reader emails. You have questions? Well, I've got answers. Let's get started. I've edited these letters for the sake of concision and clarity. First, I begin with this email from a reader. You asked if we have personal tales to share about financial scams that affected us. The answer is, in my case, a resounding yes. And very similar to the Madoff debacle. In 2016, as my daughter was preparing to go to college, we signed up with a consultant to explore her options for scholarships. This consultant recommended his own solution, an ultra-safe, can't-lose investment in real estate. We followed his solution to the tune of $250,000. For about a year, the interest payments arrived on time and in the amount advertised. Then the situation changed for the worse. In December 2017, Woodbridge Investments went bankrupt. As the plot thickened, it turned out to be a Ponzi scheme. The principal is in prison, and the consultant was a broker who stood to financially gain from our investment. We ended up suing the consultant and got a settlement. At this point, we have recovered only about 25% of our original investment, name withheld upon request. Regrettably, this sort of tale of woe is increasingly common. You should always investigate a financial consultant's background. Conduct background checks of your consultant, starting with the Financial Industry Regulatory Authority, known as FINRA, which regulates the financial advice industry. They'll let you know if there is a history of sanctions, disciplinary actions, or client complaints against your consultant. Also check online reviews from other advisors and traders, which can give you insights into a consultant's strengths and weaknesses, as well as his or her integrity. I've also received numerous reader emails inquiring about inflation and asking whether it poses a severe risk. Here's my view. If inflation rises too sharply and stays elevated for a prolonged period of time, that's a big problem. But considering the persistent slack in the labor force and the lingering uncertainties of the pandemic, most economists don't expect runaway inflation this year. Spikes of inflation are likely to be temporary, and prices will eventually settle down as supply chain disruptions get ironed out. This reader asks, in your coverage of commodities, I am surprised you haven't recommended aluminum as an investment opportunity, given the importance of lightweight materials in all areas of future world production. Peter T. Peter, you're right. Aluminum is an economically sensitive commodity that's experiencing a huge demand boom that should continue this year and beyond. We're facing a commodities supercycle, and aluminum is one of those commodities. A supercycle is a decades-long, above-trend upward trajectory in a wide range of base material prices stemming from a structural change in demand. It's how fortunes are made. The recovery from the pandemic is accelerating and in turn fueling the commodities boom. Another commodity to keep an eye on is lithium. For details about this crucial raw material lithium, read my article that accompanies this video on the Investing Daily website. Well, that's it for now. If you have any comments or questions, just send an email to mailbag@investingdaily.com. Thanks for watching.